Howdy, everybody. Welcome to the Liberty Call for Monday, June 9th, 2025. Hope you're having a fantastical day in the interwebs. It's a gorgeous day here. I mean, it is sun's out. I haven't seen a cloud all day, and I had to run into town to drop off my wife's car because it's got a bunch of error messages coming on the display. So I had to then get a little teeny rental. Looks like one of those cars that you wind up with the little key in the back. So she has my truck because she's going out of town, and so I'm stuck with this little bitty. Anyways, all right. Well, markets crept higher as U.S.-China trade talks reopened in London, injecting a dose of optimism into an otherwise cautious session. Tech got a lift from Apple's AI teases ahead of WWDC, while Tesla slid again as Musk and Trump resumed their soap opera. Warner Brothers Discovery made headlines with a surprise split-up plan, and investors now brace for this week's inflation numbers and trade rulings. So before we break all the news down, I need some help from you. Yes, you. I see you sitting there. Give me some thumbs up, a like, a share, subscribe, a follow, and press that damn notification bell. All righty. Well, let's get to the markets for today. Dow Jones flat at 0, down 1 point. Closed at 42,761. S&P 500 up 0.05, 3 points. Closed at 6,003. NASDAQ up 0.31%, 61 points. Closed at 19,591. The VIX was up today, 2.09%. It's at 1712. Canada down 0.2, Brazil down 0.32, and Mexico down 0.45. Headed over to Europe, Germany was down 0.54%, the UK down 0.06%, then France down 0.17%, Netherlands up 0.23%, Spain up 0.03%, Italy down 0.35%, Switzerland up 0.39%, and Portugal down 0.38%. Russian exchanges red again today, MOEX down 1.66%, RTSI down 1.64%. And the overnight markets, the Nikkei in Japan was up 0.92%, Australia down 0.27 when it closed on the 6th, so that hasn't been open. New Zealand down 0.07. In China, the Shanghai was up 0.43%. The Shenzhen component up 0.65. China A50 down 0.17%. DJ Shanghai up 0.5%. Hang Seng up 1.63%. And the Taiwan weighted has not been open since we were last here. All right. Good stuff. All righty. Oh, I forgot to put my weekly economic update up here. DSA Financial Group. There we are. Almost forgot to cover it. What would we do without this? I know. Means I need to go back and redo my show notes because I forgot to put it on there. Anyways, all right. Well, let's get to this. Alrighty. Well, first and foremost, let's do the weekly economic update. Stocks rallied last week as investors responded to upbeat economic data and easing trade tensions. The S&P 500 added 1.5%, while the NASDAQ composite rose 2.18%. The Dow advanced 1.17%, and overseas markets picked up 0.78%. The S&P 500 closes above 6,000 again. Earlier in the week, markets notched steady gains as investors awaited key economic indicators and monitored ongoing trade discussions. Mega cap tech names, particularly AI chip makers, led the broader market higher as sentiment stayed bullish on prospects for a U.S.-China trade deal. Midweek, however, concerns over tariffs and a notable decline in one mega cap tech stock slowed overall market momentum. Recent conversations between the U.S. and Chinese leadership helped investors envision progress towards a trade deal between the two countries. They're not nation. The United States is not a nation; it is a republic. On Friday, stocks pushed higher following the release of the May jobs report, which showed an addition of 139,000 jobs above expectations of 125,000. The S&P 500 closed above 6,000 for the first time since February, a key psychological hurdle for some market participants, and the Dow erased all of its 2025 year-to-date losses. All right, so jobs and trade. Amid considerable market noise, stocks pushed higher last week. Here are three key takeaways. First, the upbeat jobs report was strong enough to ease some economic concerns. Second, the jobs report showed that the unemployment rate held it steady at 4.2%, and wage growth increased by 3.9% year over year. These figures also helped ease slowdown fears. last. Despite some political squabbles, trade talks progressed this week, with the U.S. striking a deal with Germany while continuing to move forward with China. Key economic data coming out this week: Monday, wholesale inventories; Tuesday, the NFIB Small Business Optimism Index; Wednesday, the Consumer Price Index, federal budget, and 10-year Treasury note auction; Thursday, jobless claims; the the Purchaser Price Index, the PPI, and 30-year Treasury note auction; and Friday is consumer sentiment. All right, so that is everything there. Let's jump into our market recap now. SP 500 climbs as U.S.-China trade talks get underway. Right. The SP 500 climbed Monday as optimism over renewed U.S.-China trade talks boosted investor sentiment, building on Friday's rally spurred by stronger than expected May jobs data. Citigroup raised its year-end target for the SP 500 to 6,300, citing improving fundamentals and sustained valuations. The index had recently closed above 6,000 for the first time since February. So let's do a little math here. So it's going to go up 300 points over by the end of the year, which is only 5%. So we shall see if it actually reaches that number. So, all right, let me get back to my notes. Where was I? High-level trade negotiations between U.S. and Chinese officials began in London, aiming to resolve the ongoing tariff dispute. Treasury Secretary Scott Bessent, Commerce Secretary Howard Lutnick, and Trade Representative Jameson Greer are meeting with Chinese Vice Premier He Lifeng. It's Lifeng. The talks followed a tentative agreement reached in Geneva last month that temporarily paused punitive tariffs, which are now on hold until August 12th. Meanwhile, Chinese export data showed a slowdown in May, reflecting the impact of existing tariffs. Civil unrest in Los Angeles over Trump's immigration policy slightly tempered risk appetite, but attention this week is focused on upcoming U.S. inflation data. The Consumer Price Index, due Wednesday, is expected to show a modest rise to 2.5% annually, driven by higher electricity costs and tariffs. The Producer Price Index, the PPI, follows on Friday. And back to the immigration thing, enforcing federal law on those who are trespassing in the United States. I don't understand why if people are out there, destroying property, shoot them. I mean, seriously, that's why you have pistols and rifles. It'll send a clear message, and will probably, maybe encourage some of those people who are here illegally to skedaddle. Anyways, all right, back to the news. On the corporate front, Apple is hosting its worldwide developers conference, expected to, that's the WWDC, expected to introduce iOS 26 with AI-related updates. Warner Brothers Discovery announced plans to split into two public companies, while Merck reported positive late-stage trial results for a cholesterol-lowering drug. Baker Hughes revealed it will sell its precision sensors to Crane for $1.15 billion to streamline its operations. With trade optimism, strong labor data, and a heavy week of inflation, corporate news ahead. Markets are bracing for more volatility amid ongoing geopolitical and economic crosswinds. All right, there was something I was going to chat about here. Where was it? Anyways, all right. I guess it wasn't important. Oh, the cholesterol lowering drugs. Do some research on that. Statins and things like that. While supposedly they lower your cholesterol. Unless you have a lot of inflammation in your body, cholesterol isn't necessarily a bad thing. So again, do your own research. Read up on that, because doctors are basically just drug dealers. All righty, well, let's get that off the screen. Boop. And let's get to a data report here. U.S. wholesale inventories in April revised higher. What is that? U.S. wholesale inventories rose by 0.2% in April, driven largely by businesses stockpiling prescription medications ahead of a potential Trump administration tariffs. This increase was a revision from the previously reported flat estimate. According to the Commerce Department, on a year-on-year basis, inventories climbed 2.3%. Prescription drug inventory surged 1.3%, with additional gains seen in motor vehicle sales, apparel, groceries, and professional equipment. This buildup reflects growing concerns that Trump may impose tariffs on pharmaceuticals, products historically spared due to their critical role in public health. This front-loading trend began in the first quarter as companies rushed to import goods before tariffs took effect, contributing to a record trade deficit that subtracted 4.9 percentage points from GDP. In contrast, a slowdown in imports during April led to a record drop in the trade deficit, which could give a lift to second quarter GDP. However, economists caution that weak inventory growth may offset this benefit. Inventory accumulation in Q1 reached 163 billion, but overall GDP still contracted at a 0.2% annualized rate, the first decline in 3 years, following a 2.4% growth in Q4. Meanwhile, wholesale inventories rose just 0.1% in April after a strong 0.8% gain in March. At the current pace, it would take 1.3 months for wholesalers to clear their shelves, unchanged from the prior month. All right. So, I mean, what that really tells us is that the GDP numbers for Q1 and then Q2 are probably going to be so skewed that we really aren't going to get a clear picture on what's going on in the economy, since economists love to look at GDP and these big numbers, which they can be manipulated. So. All righty. Next up, let's see here. This comes from Zero Hedge. Inflation expectations tumble as latest New York Fed survey suggests Fed late to cut. So, all right. Inflation expectations across all time horizons declined in May, marking the first broad-based drop since 2024, according to the New York Fed's Consumer Expectation Survey. 1 year ahead inflation expectations fell to 3.2%, down 0.4. 3-year expectations dropped to 3%, down 0.2, and 5-year forecasts eased to 2.6, down 0.1. These declines were consistent across age, education, and income groups, signaling a potential renormalization of inflation concerns, despite alarmist narratives in other surveys like the University of Michigan's. Consumer sentiment improved in several key areas. Expectations for home price growth dropped to 3%, with the decline driven by respondents in the South and the West. Year ahead inflation expectations for gas, medical care, college costs, and rent also declined, while food price expectations rose slightly to 5.5%. The job market outlook improved. The perceived chance of job loss dropped 0.5%, and expectations for higher unemployment next year fell by 3.3%. Households also reported improved financial outlooks, with fewer respondents expected to miss minimum debt payments, now at the lowest level since January. While access to credit is still tight, perceptions have slightly improved, though expectations for future credit ease have weakened. Household income growth expectations ticked up to 2.7%, while the spending expectations dipped slightly to 5%. These findings support the view that inflationary pressures are cooling, potentially giving the Fed room to cut rates later this year. There's that statement. They want to cut rates. They really do, because it really helps us, the consumer out here in the world, when you deflate the currency. Awesome. All right, got one last article. It's the Monday Morning Outlook from Mr. Brian Westbury at First Trust. This week's article titled "Thoughts on Inflation." Let's see what he had to say. During the 2008 financial panic, many feared hyperinflation due to the Federal Reserve's aggressive quantitative easing and 0% interest rates. However, inflation remained muted because mark-to-market accounting destroyed capital faster than QE could replenish it, and stricter capital and liquidity requirements on banks kept money supply M2 growth modest at about 6% annually. This changed during the COVID crisis. The Fed relaxed liquidity rules while the Treasury used banks to rapidly distribute tax rebates, unemployment benefits, and PPP loans. This caused M2 to surge, fueling inflation. As predicted, inflation spiked, with the consumer price index peaking at 9% in mid-2022. Since then, M2 growth has stalled, now just 0.5% above 2022 levels, contributing to cooling inflation. Well, I'd say it's actually, at this point, contributing to warming back up, but we'll agree to disagree on this. CPI has fallen to 2.3% and core inflation to 2.8%. Supercore inflation, excluding rents and volatile foods, and producer prices also indicate disinflation. While May's inflation reports are expected to be slightly hotter, inflation remains low by historical standards. Well, except for that 40% jump we had a few years ago. Despite Trump's ongoing tariffs, overall inflation hasn't surged because tariffs merely shift spending, raising some prices while depressing others. The real driver of inflation is money supply. Currently, real interest rates adjusted for inflation are around 2%, the highest since 2006 and 2007. this monetary tightness has helped bring down inflation while the economy could justify two modest rate cuts. The Fed remains overly cautious and fixated on tariffs. Mr. Westbury, um, Mr. Westbury argues rate cuts are warranted, but now predict the Fed will stay on hold until September. That's probably true. All righty. Well, that is everything that I had to cover for today. Did you find it useful? Was it exciting? I think so. All right. Well, if you need to get in touch with me, where do you want to go? DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a call. I'd be glad to help. All right. Well, I hope everyone out there has a wonderful evening, and I'll talk to everyone again next time. Adios.